And the issue when we got into Bitcoin is no publicly traded company held any material Bitcoin. So indefinite intangible means you take the volatility as an operating loss on your P&L. It's a source of massive inertia because every publicly traded company is running on GAAP accounting. And so we're publishing our GAAP balance sheet and our P&L every quarter. And investors are reading the P&L. And the whole point of GAAP accounting is, in theory, I ought to be able to, at a glance in 30 seconds, look at your balance sheet and know how much capital you have. And in 15 seconds, look at your P&L and know whether or not the business is well run. And when the GAAP accounting aligns with the underlying business, then you can do that. But when it gets out of alignment, then you have to adjust it with pro forma accounting, non-GAAP accounting or adjusted accounting. And when you get to adjusted accounting, it goes from being a 30-second inspection to a 30-minute thing. And you know how difficult it is to communicate a 30-minute concept to the world? Very, very challenging. So the issue right now, and the issue when we got into Bitcoin is no publicly traded company held any material Bitcoin. So the accounting treatment was probably appropriately conservative. The most conservative accounting treatment you could imagine is indefinite intangible. And what indefinite intangible accounting means is you buy something, you test it against the market continually, you take the lowest bid and you mark the value of the asset down to the lowest bid at any point in the history of your ownership. And you treat that not as an investment, but you treat that as a loss in the core business, the operating business. So if you have a business that makes $100 million a year and it's run perfectly, you know, with a perfect pegged 20% operating margin, right? If you buy Bitcoin and Bitcoin trades down for 1 hour and trades back up again, you might have a $100 million operating loss. And then you would be showing the business made no money this year on a GAAP basis. So now you're an outside investor and you're staring, you're saying, what happened to the software business? It looks like the operation got wrecked. If I made 1 million decisions poorly, you know, I probably couldn't go from 100 million in cash flow to zero, right? Or if I did, it'd be challenging. Or on a Saturday night, someone could flash crash something and you would have a $100 million loss showing on the operating statement. So indefinite intangible means you take the volatility as an operating loss on your P&L and you take the theoretical worst case. The theoretical worst case would be, I buy Bitcoin and I wait for the lowest price ever and I sell it all, okay? That you take the theoretical worst case and you represent that as the status. So when you print your quarterly results or you print your annual results, you want a simple example, you buy $1 billion of Bitcoin, it trades down to 500 million, then it increases to 1 billion, then it increases by a factor of 10 to 10 billion. If that's the fact pattern, when you close your books under indefinite intangible, your books say you have $500 million of assets and it says that you lost $500 million in the operating business and the money's gone. That's what GAAP accounting says. In actuality, you might have a statement that says you have $10 billion of assets and it looks to the casual observer like you generated a $9 billion investment gain. So now how do you fix it? Pro forma adjusted accounting. You have to create a schedule, a reconciliation. But now what have you done? You've just made first of all, you've made the investor's job 100 times harder. And investors got to read all the pro formas, think about it and and then they've got to reverse it out and figure out what really happened in the rest of the business, right? And then they've got to figure out what's your balance sheet really look like. And then the second problem you have is your statements become non-comparable over time. Like for example, if I look at my balance sheet on a GAAP basis today versus a year ago, right? Bitcoin could go up by a factor of 100. The balance sheet doesn't change. So when you're comparing quarter versus quarter, there's no information there because you're suppressing it, right?
Yeah.
And then if two companies have Bitcoin, one company has 100,000 coin and one company has 10,000 coin, and Bitcoin goes up by a factor of 10, neither company shows an investment gain. Neither company shows a balance sheet adjustment. And so how do you compare one company to the other company if you're trying to make a rational investment decision? So things become non-comparable across securities, and they become non-comparable across time. And you're invited as an investor to create your own set of pro forma systems to compare it yourself, which is like 1,000 times harder. So that's an impediment for a public company or for a company that relies upon GAAP accounting. But here's where it's really an impediment. Like, why can MicroStrategy do it? Well, because we rotated our shareholder base to be long Bitcoin, and because, fortunately enough, we were able to build a substantial Bitcoin position. So now, if you know that MicroStrategy has 114,000
Bitcoin.
Yeah, if I have 114,000 Bitcoin and 114,042 Bitcoin. All you have to know about MicroStrategy is take 114,000 and you multiply by the price, and you know that we've got that much. But let's say that you were Google, or you were Apple, or you were Facebook. Well, you've got all these other businesses, or Amazon, and now you're trying to decompose the businesses. And if they buy a big Bitcoin position, then what looks like a pristine P&L, everybody debates, is Apple's gross margin going to be 38% or 38.5% this quarter? And that's a big deal, right? I mean, there are people who take victory laps on getting within 1% of the gross margin. Well, your gross margins would totally all your margins get blown out of the water from the volatility, the accounting volatility of the Bitcoin.